So this video is aimed at complete beginners who haven't got a clue where to start but would like to buy their first property at some point in the future. Here are some vital steps for you to help you on your way. Make sure your credit profile is displayed correctly as the first step as a first-time buyer. This is really important, as mortgage lenders will look at your credit profile and will need to pull in your data to ensure a successful credit score. Make sure the credit providers who provide your mobile phone, your bank account, credit cards, etc. all have your current address correctly registered. This is really important across all three credit profiles, Equifax, Experian and TransUnion. These are the three credit agency mortgage lenders will look at when assessing your credit profile, so they all need to be in a healthy condition. Ensure voters roll records are showing correctly, as this will really help your credit profile as it connects all your addresses together. If you are not on the voters roll and you're able to go onto the voters roll, then I would certainly do that as soon as possible, even if it's just for mortgage purposes. If you're not legible to vote, then make sure your address is displayed correctly on your current credit providers, and that is the best thing you can do. To look at your three credit profiles at the same time that mortgage lenders will look at, instead of downloading each individual file, just click the link in the corner of the screen, which will take you to Check My File, where you can access your credit profile across all of the credit agencies that mortgage lenders will access in one file. It's free to download for the first 30 days and £14.99 thereafter. You can cancel at any time. The mortgage documents you need as a first-time buyer. Proof of ID. This can be a passport or UK driving licence. For non-UK nationals, you would need to supply your passport and share code. If either of these documents are out of date, then renew them before you apply. Proof of address can be a bank statement or a utility bill within the last 3 months, not a mobile phone bill. Proof of income, 3 months pay slips and 3 months salary credited bank statements. If you're a contractor or 0 hours contractor, then you might need to supply 6 to 12 months worth of history and evidence. If you're self-employed, at least 1 year's SA302s and tax year overviews, plus your accounts for limited companies, and 12 months or up to 12 months business trading bank statements. Proof of deposit. You're going to need to show bank statements showing every penny that you've saved, and the key component here for proof of deposit is the source of funds. Where did that money come from? You need to prove it. Continuous employment history is a win-win situation. When applying for a mortgage, personally, I wouldn't apply for a mortgage unless you've got 12 months continuous employment history within the same industry. This is going to help you the most and carry the most weight, because after all, your income pays the mortgage. You will find mortgage lenders that will accept your application on the back of 1 day or 1 month's employment history. And I'm sure some of you have been successful in this situation, most likely because you're strong in other areas, but your chances will reduce, especially if other areas of your situation are weak, such as bad credit or high debt. Your step-by-step process as a first-time buyer when looking at properties. Step 1. First of all, understand how much you can borrow, how much it's going to cost you monthly, and properties within your budget. We call this the onboarding process. If you'd like to discuss these options and get mortgage ready, then book a free chat with me. The link's in the corner of the screen or in the description below or in my bio. Step 2, get mortgage ready. So this means having all of your documents checked properly, being armed with an agreement in principle certificate and bank statements proving your deposit before you start looking at properties. Step 3, view properties twice. It's fine to make an offer after your first viewing, but make sure you go back, because the first viewing, you'll look at the property with your heart, and the second viewing, you'll look at the property with your head. Step 4, don't offer the maximum on your first offer. Think about a 3-step offer approach, with the third offer being your third and final offer, and literally phrase it like that to the estate agent. It's impossible to provide a one tactic that fits every single property because of the market changes. But of course you want to get the property for as low as you can, but you don't want it go in too low that you waste time and end up not being taken seriously. To help with this process, download the Property Log plugin from Google Chrome, which will give you insights into how long a property's been on the market and any price changes when you are viewing properties on Rightmove. Step 5, make sure you get your solicitor quotes done from a no-win, no-fee solicitor before you start looking for properties. Because once you've had an offer accepted, the agent that you are buying from will want your solicitor details in order to remove the property from the market, which is really important. You don't want someone else to come along and buy it. We provide a free quoting portal where you can obtain solicitors, or what's known as conveyancer quotes, from conveyancers that offer a no-win, no-fee service. This means once you've paid the initial upfront fee, which is usually £300 to £400 to cover your searches, should you for any reason not proceed with a transaction, you won't have a penny more to pay. Plus, all our solicitors on our panel on the quoting portal offer what's known as a second search promise. So if you pull out of the property transaction at any point for any reason, but find another property within 6 months of pulling out of the first transaction, your second set of searches will be paid for you on the basis you use that same solicitor. So that will save you £300 to £400 in that instance. Understand the process of buying your first home. Step 1, onboarding. Getting your documents checked and becoming mortgage ready. Step 2, viewing properties, having a solicitor ready and negotiating your way to a successful offer. Step 3, your mortgage application submission and solicitor instruction. So when your mortgage is being applied for, this is also the time to instruct your solicitor. Step 4, the mortgage lender will access your documents and carry out a basic valuation. Step 5, a mortgage offer will be produced on the back of a successful valuation and underwriting process, which is the checking of your documents. A mortgage offer is the legal document which states you've got the mortgage and will usually last for 5 or 6 months. In some cases, it's 3 months with specialist lenders, other cases 9 to 12 months if you're buying a new build property and have selected a new build specialist lender. The idea is that before the mortgage offer expires, the rest of the legal work will be carried out by your solicitor. Your solicitor will carry out searches which will give you important information of the local area you're buying in, so you can be fully informed before you sign on the dotted line. And once everything is ready, your solicitor will request mortgage funds from your mortgage lender in preparation for exchanging, which is the signing of contracts, handing over your deposit and getting ready for completion, which is when you pick up your keys. The whole process from the point you've got an offer accepted until you get your keys in your hand, on average takes around 3 months. Sometimes this is quicker and other times it's longer, dependent on the property chain. A property chain is how many people in the process are buying and selling. So the person you're buying from, do they also need to find a property as well, and so on. That forms the property chain. And you can only complete and pick up your keys at the same time as everyone else. Bonus tip, if you're a first-time buyer and maybe the standard 4.5 times your income, which is the income multiple that most mortgage lenders provide, might not be able to help you. You might need to borrow more. Now, the good news is that there's mortgage lenders like Nationwide, NatWest, Leeds Building Society, Principality Building Society, and Virgin Money. There's probably a few more and a few more that will become more flexible in this area, who now lend anywhere between 5 to 6 times your income. However, you do need to meet some criteria, such as earning at least £30,000 with some mortgage lenders. Others, there's a £40,000 minimum salary. Depends who you're using. But these mortgage lenders will insist, or most of them will insist, on you having a 5-year fixed rate or more in order to access these income multiples. I think Principality do have a 2-year product without needing to select a 5-year product. But you know, sometimes this can be the difference between finding a property within your budget. Mortgage warning: as a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. So thanks for watching today's video. Please check out the show notes for a recap with access to any links discussed today. And if you feel like you're getting value, please do consider subscribing. Have a beautiful day. I'll see you in the next one.